The following podcast is recorded and produced by Emerge, a media creators co-op.
Good afternoon, ladies and gentlemen. This is Don from the Defion Productions podcast, and this is the Week in Bitcoin. I am the hardest working nobody in Bitcoin, and we're going to work hard today talking about what's going on in the last week in the Bitcoin space. We'll take a look at what's happening in the charts first, as we are to throw the lead out first in Fed decision week. And if you take a look at the charts right here, we are sitting at a little over 90,000. We have a 90,769 BTC price right now, sitting at a market cap of a little over $1.8 trillion. Total crypto market cap sitting above $3 trillion at $3.08 trillion. Looking down the shitcoin rabbit hole here, we have Ethereum sitting a little over 3,100. XRP a little over $2, and going on down the line, Solana at 132. The fear and greed index is sitting at 16. We've been in the teens for quite a while now. We've been hanging out in the low 90s, high 80s for the past couple of weeks here. From this 30% downtrend we've seen from the all-time highs back in October, close to 2 months past that October 10th crash. And we're just kind of here sitting not too far off of 100K at 90,000. This is a pretty big week, I would say, if we're going to be turning things around and, moving into the next phase of a continuation of the bull run, if that's indeed what we're going to be doing. We can take a look at here. Kobayashi letter tweeted earlier, 94% chance that the Fed will cut interest rates on Wednesday per Polymarket, who is pretty dead on their assessments. So the third rate cut of 2025 incoming. Most analysts think we're going to get a 25 basis point cut. Some think we may get a 50 basis point cut. I kind of think the 25 is already kind of baked in. If we do find that 50 point cut, I do think that markets will probably rip on that news, because I think that this is a catalyst for the next phase of QE. QT has officially ended as the 1st of December. Another tweet here: bad news is good news when you're going from a tightening cycle into an easing cycle. It only accelerates the easing. Remember, and this is important, and this is the reason why I'm showing this tweet here. Remember, Republicans will get absolutely decimated if they can't make everyone feel like the economy is heading in the right direction. Everyone feels poor, they lose. Liquidity wave loading 2026. On my way into the studio today, I was listening to a Spaces. The Cardone brothers were speaking. I don't necessarily remember the theme of the space. I saw that Grant and Gary are on stage, and I just jumped in. My ride is about 10 minutes from where I was coming from into the studio, so I listened for about 10 minutes, and Grant Cardone was talking specifically about how the overall population views inflation incorrectly. And I was feeling mixed on how I felt about that statement and his reasoning to back it up. He was talking about how basically inflation, which we talked about in this podcast before and highlighted, so it's fair. Inflation is good for people that have assets. So people that have equities, people that have real estate, people that have Bitcoin, people that have gold are benefiting from inflation, because inflation makes asset prices rise. But the part that was kind of conflicting was, like, he was talking down to just regular, everyday middle-class people, looking at it as a bad thing. And I think, while I agree with the first part of the premise, and he's correct that it does significantly positively affect asset prices, an overwhelming majority of the population don't have assets. So they're going to the grocery store, they're going to the market to get goods and services, and they're getting crushed by inflation. So it's natural for them to look at inflation as a bad thing. And even as somebody who owns assets, the majority of my net worth being in Bitcoin, and I will most certainly continue to benefit from inflation as they have to keep printing money and inflation keeps going up and Bitcoin's price inevitably goes up in the long run. And I view that as a good thing. I still am a middle class American. And when I go to the grocery store or I go to the market with dollars, because I still operate in the fiat world as well, and I buy things and I see the prices continue to go up, it pisses me off. So I see both sides of it. I see the everyday guy that, is just trying to survive, getting pissed off by the rising prices of goods and services. And I also, on the asset side, like the fact that inflation will make my assets rise. What do you think, Rich? How do you view that as an outside guy? You have assets as well, so your assets go up too, but you're also going to the market with your dollars to buy goods and services, and it sucks to see your dollars.
Yeah,
I would assume.
I separate my investments, my traditional investments. I don't look at them the same way I look at the economy. I don't think they're the same thing anymore. They're just not. So in my mind, like, it's cool that I have that money, which I'm not. I'm saving though. That money is for the future. That's money I'm going to need when I'm older. So that money's just there. Like, it's great. It's nice when the market's up. I feel like I'm making money, but it's not like I don't feel rich because of it. I don't really use it. I could use it, but that'd be stupid because I won't have it when I need it. So, but then I go grocery shopping today and I recognize that everything is up. Everything's up. Like, there's not a single thing I buy at the grocery store except for the eggs. Okay, the eggs are down, but everything else is up. Produce is up. Everything's up. So, and that's all my stuff. Like, everything, I look at, if you want to lease a car, it's up. If you want, everything's up. All my younger alumni from one of my teaching days that I talked to were all struggling to meet their rent and their salaries and all that stuff. And they're all trying to work. None of them are like afraid to work. So I don't, the economy's in a crappy place. People that are looking for a job can find one. And it's not that they're not willing to work. There aren't a lot of jobs, especially if you have a degree and you spent, all that money and you got college debt. So yeah, like, the interest rates coming down will probably, I'm hoping, means that it'll open up, it'll loosen up. Businesses maybe will be less fearful and maybe they'll start hiring people again in January.
Yeah, the job market is definitely soft right now.
It's terrible. And inflation, I don't care. Like, the fact that he won't tell us what his numbers for inflation and what his unemployment numbers are.
When you say his, who are you referring to?
The government. The government isn't releasing things. We're hearing, like he says, well, if you look at the prices at Walmart, that's not an indicator.
I did, to be fair, I did see a tweet earlier today that he's pivoted like he always does because he never can just stay in one lane. He's always got to move around. I saw that he's now going to be releasing the November numbers with the October numbers.
Okay.
Potentially. I don't,
right.
And he could change that, but I didn't verify to see if that was completely accurate, but I did see that. I did see that tweet floating out there. If you throw this tweet that I got on the screen up, this is why we Bitcoin. This is it right here. This is what we know that the economy has to do. This is what we know the Fed has to do. The Fed is set to start buying back $45 billion in debt every month starting in January. This would inject massive liquidity into the markets. This only means one thing: QE is coming back, but this time they won't call it QE. So if we look in here, we're out of the consensus early and in size. The team led by Mark Cabana wrote in a client note that would result in an estimated Fed buying of at least $20 billion a month for natural balance sheet growth purposes and another $25 billion a month to reverse the reverse over drain for at least the first 6 months of the year. So the Fed is getting ready to inject liquidity back into the markets, which is what Bitcoin is waiting for, and equities. Like, we're in this lull between, we have a lame duck Fed chair. So the lame duck Fed chair is not really being overly forthcoming on, how he feels about things because he's going out the door. So, that's why this Fed decision this week, the 25 basis points or 50, whatever it ends up being, isn't as important as what he's going to say when he speaks at 2:30. We're going to get a decision around 2, and then at 2:30 on Wednesday, he's going to speak to reporters. He's going to give Fed minutes. He's going to give insight into what the Fed is thinking, and I think that is going to be much more important than if we get 25 basis points or we get 50 basis points, because this is the last meeting of 25 and one of the last meetings that he's going to be the chair for. And, Trump has already been hinting that Hassett is going to be the next guy to probably take over. If it's not Hassett, it's going to be somebody that Trump has in his pocket and is going to be on board, at least initially, with injecting liquidity into markets and lowering rates. So whether it lowers this week or it lowers in a couple of months, like that's where this thing is going. And I think that's a big reason why Bitcoin is just sitting in the low 90s and we haven't gotten a move in either direction. We haven't gone back over 100 or we haven't dropped off a cliff and gone down to 60. You know what I mean? I think that's what the market's kind of waiting for. We're just waiting to see like which direction, one way or another. Are we going to get a short-term move because Powell's going to say something this week that's really bad and we're going to be like, okay, for the next 2 or 3 months, things are going to suck. So we're going to get that drop into the 80s and maybe into the 70s. Or is Powell just going to throw his hands up and just like give up and say, yeah, dude, like we're injecting liquidity and we see, I think it's going to be really interesting to see how he plays it.
Well, just the buying back debt is just, it's not real money, right? It's just, we're just printing more money essentially, right? It's not really doing anything. It's going to just cause inflation because, not that 45 billion is a lot, but in the grand scheme of the government, but it's not even, that's 45 billion a month is nothing.
25 billion. I mean, I mean, we're adding almost $1 trillion every like 100 and something days,
right,
to the national debt. So yeah, I mean,
like stop adding to the debt. Like
it's not going to happen.
I know, but it doesn't make any sense to me. You're buying back debt, but you're still adding. So it doesn't, like, it's like I borrowed $50, right? But I paid the other guy back $5. It means nothing, right?
Let's take a listen to who the overwhelming majority of betting markets think, and Trump has even hinted, is going to be the new Fed chair come May of 2026. Let's listen to a clip of him in his own words speaking.
There's a huge amount of positive news that the president is going to be breaking this week about the economy. We've got a person who actually approached the studio with me, walked with me, who's tracking the openings, the groundbreakings for the new factories that are, in the trillions of dollars of announcements that the president's been making. And we're up to almost 30 of those that actually the groundbreakings have happened. And so there's a lot of positive news that's positive for people's jobs, for people's incomes, and for inflation. And President Trump is just going to go out there and remind people of that. But in the end, again, going back to the eye on the horizon, that President Trump's economic policies were profoundly popular just before COVID in his first term because he had $6,500 of income growth after the big tax cuts. Yep. And so right now we're going into next year where the typical person who's got no tax on tips, no tax on overtime is probably going to see an extra $1,600 to $2,000. A lot of that will come as tax refunds in the beginning of the year. That kind of stuff is going to make it so that people are going to look at their wallets and say, oh, boy, this guy's really making me better off. And in the end, that's more important than any poll. The final thing I got to say is that we did look at a lot of the sentiment, the softer indicators over the last few weeks, and we found a pattern that I'm sure you guys could find a chart that would show, which is that consumer sentiment tends to crater when there's a government shutdown. And so we have sort of back-to-back 4% quarters coming in, and then we got the government shutdown and all the chaos related to that. And the sentiment indicators went down, but the hard indicators really didn't. And that's a pattern that we've seen over and over again. There's a huge...
So they're trotting out Hassett to talk about how things are about to be really, really good. And, things are going well in the markets. And to your point, Rich, and to what we've been saying on this podcast for years at this point, is that there's two separate economies right now. Like, there's the Wall Street economy, where people that own assets are doing well because their asset values are going up. And there's the Main Street economy, where people are out in the market looking for jobs and can't get them, or are working and going to the market with their dollars and buying less and less because of inflation. So it feels like, we do this podcast every week, and we talk about, Bitcoin as being Bitcoiners and the bright future that it has for Bitcoiners, while also acknowledging that an overwhelming amount of the population, not viewers of this podcast, of course, are not Bitcoiners. They don't have access to Bitcoin or have access to equities or real estate or other assets. The overwhelming majority saves money, whatever they do save, and puts it in a bank account, or is just living paycheck to paycheck and doesn't even have any money to save, and is just getting absolutely decimated by the economy that has been created. So in some respects, it feels like a spit in the face to people that get up and work hard, and for whatever reason, whether it's, their own fault or circumstances that don't have assets, that, you turn on CNBC and you see these guys like rah-rah, and you're just like, dude, I can barely afford my groceries or my rent every month. I mean, it's crazy.
People that I talk to, pretty regularly, they're in the late 20s, early 30s. They're putting some money, if they have, if they're lucky enough to have a good job, they're putting some money into some type of 401k of some sort, maybe an employer matching or something like that, or they've put some money aside. But a lot of them are dealing with college debt, and or are they got a car loan, or they're trying to save so they can buy a house because they don't want to rent. So they're putting money down a toilet because they figured I'm better off trying to put some money aside. So when you're in that boat, when you're 30, let's say, you're not really in a spot where you can heavily invest and probably even buy a lot of Bitcoin, because right now you're like, well, it's cool that maybe in 30 years it'll be worth a lot to me, but right now I also need a place to live where I can actually, because my mortgage payment, at least I'm generating equity as opposed to, just paying the landlord. And there's also a quality of life issue that a lot of people would rather own a home. So even if the apartment's more efficient, you could argue that it's not necessarily a better living situation, So you're trying to put money aside. So given where it is for young people, where they are career-wise with their economic, success at that point, it's tough. It's tough.
And the other thing too is the ones that are putting their money in those 401ks that are really young, like they're locking their money up for 30 years. So
right.
Even when those 401ks are appreciating, it's still not doing them any good in their everyday life because they're not going to see it for 30 years.
Right.
They don't own the type of assets that you could borrow against or realize gains for. They're going to help you in today's world. Like, you know what I mean? So
right.
That's what, like, you might say, half of the population has their money in the markets through 401ks or whatever. But it's like, okay, well, what percentage of the population has it in equities where they can borrow against them, like somebody like an Elon Musk can do, or somebody like a Jeff Bezos can do, where they don't ever have to sell the asset, they have full liquidity with the asset while also getting the appreciation of the gain. Like, you can't borrow against your 401k. Right. I mean, you could, but then you actually are taking the funds out of it to do it.
And there's also a lot of people are given that they think it's a financial advantage because a lot of times they might have an employer matching type of thing, or like you get a job. Like I have a relative that works for an architect firm, and the new architect.
Art Vandelay?
Was it?
Art Vandelay?
Art Vandelay. He's designing the new Guggenheim. Is that the Seinfeld reference?
Yep.
And she's like, the new employees come in and, they want them to give them stock in the company, and they're like, we don't want the stock in the company, we want the cash. And then the owners don't see that difference. Like the owners are older, they're in their 70s. So they think that's a great deal. They think they're taking care of their employees. But younger employees are different. They're not the same. They look at everything much different. And I a
lot less trusting than other generations.
And I don't think the loyalty is there. I don't think
nor should it be.
That's a really good point. I don't think there's a lot of people that are going into careers anymore outside of maybe teaching or something, or police department or something, where you're going to work one place. Most people really probably understand they're probably not going to be with that company their entire career. Like, where in the old days, you get a job at a plant, you get a job at an accounting firm or whatever it might be, you probably figure you're going to be there 15, 20 years. You
Yeah,
know,
people have the ideology today that they create their own pay raises. They work for a job for a couple of years and then they upgrade to the next job with a new
Yeah.
raise and just bounce around. And I think that's good. I think that creates a better. I think it ends up creating a better market because people didn't do that because of how good the benefits were 40 years ago.
right.
They've gotten much worse. Employees are treated benefit wise much worse. Pensions are gone. Healthcare is expensive. Like there's just a lot of things that went the opposite direction. So employees have taken things into their own hands and said, okay, if you're not going to treat me the way that I think I should be treated, then I'm going to employer shop.
Yeah.
And I think that's good. And I think
Especially if you're a hard worker.
if employers don't like that trend, then the only alternative is to incentivize employees to stay.
Yeah.
Which is going to affect their bottom line, which I don't think is necessarily going to happen. But if it did, it'd be a good thing.
Yeah. I agree. I think like there used to be a time where, in small companies, let's say, you knew the president of the company, and he probably was doing much better than you because he was president of the company.
Mm-hmm.
But he wasn't doing that much better than you. Like he wasn't like, you know what I mean? Like whatever his value was, they would put it back. They would take care of their employees better. Maybe they could. Maybe it was different back then. Maybe life insurance was cheaper. Whatever it
now
was.
you work for companies and you never meet the president.
Yeah. Now, right. And now these companies are so big and they're owned by this and they're in hedge fund and all this other stuff where they're really not interested in the welfare of their employees, and which is why. Like, and I'm not trying to be like a bleeding heart liberal over here or something. I'm just saying that's the facts. Like you can talk to a bunch of people, and that's why they're looking at things like crypto, Bitcoin, other ways to become independent workers. Like just be their own boss. They'd rather be a 1099 employee for some things and just not work for anyone. Like that's kind of how some of the trends are. Like I'm going to just be I don't want to work for those types of organizations, so I'm going to try to do my own thing.
Yeah. It's a wild economy in many facets. In one sense, people are doing better than they've ever done on one end of the spectrum, and on the other end of the spectrum, people are just strapped, and it's tough to find employment for people. It's tough to find a house for people. I don't know, man. Like the wealth gap has been so exacerbated that I only think it gets worse. It doesn't get better. And which is another reason why Bitcoin was created. But I just don't see, like, the more they print, the bigger the wealth gap gets. It just redistributes. And then when they try to do these UBI things, it just ends up going right back to the people that have all the riches, because we have a vastly undereducated, financially literate population that doesn't understand how any of this stuff works. To go back to that, the Cardones speaking on that Spaces, like Grant and Gary are obviously very financially literate, and I think sometimes it's hard to get outside of that like bubble to put themselves into the ideology or mindset of someone that's not. So they see these things that the typical person can't see, and then they wonder why they don't see it, and they end up talking down to people that don't even know they're being talked down to because they don't understand. If that thought makes sense.
I completely agree with that. I think trying to get people to understand those types of things, and as a society, we don't as a corporate society, our country does not want you to be aware of that. They don't want the populace to know what inflation is and what spending is, and whether it's a fault of the educational system, whether it's the faults of our government, or it's big corporations, whatever it is. Like it's just the way it is, and it's gotten worse and worse and worse. Something as simple as this: there's a house around the corner from me that's listed for $185,000. It is not that nice of a house. It's a cute house. Don't get me wrong. It's a nice house. I know the owners. It's a nice house, but it probably sold originally 8-9 years ago. I looked it up and I forget now. I think it was 100,000, and before that, like within 15 years, it sold for 65. Now wages have not come up by 3 times. Certainly not in our community.
Mm-hmm.
So, where's the pile of money that someone buying that house, whether they're young or old, to also do the other things they have to do? Considering Medicaid, they're paying into their insurance and those things. The cars are more expensive. So the Cardone's talking down to people. It's like, listen, it's great. It's awesome what you're saying, but I can't even think about those things. I can't even think about those things. And then people get harassed because they spend money on a vacation. Well, you know what? If your life's tough and you take a vacation, I'm not going to begrudge anyone. Yes, that money could have maybe better spent on something else. But for some people, they just want to have a quality experience. So like, there's some level of the populace is just mad. So most of the people aren't going to care what the Fed does on Wednesday.
Oh yeah, the overwhelming amount of the population isn't even going to know that it
They're
happens.
not going to care, and they're not going to care because it doesn't affect them.
But it does. They don't know that it affects
you know
them.
what?
Yeah,
They don't think
I
it affects
know.
them in a
They
real
don't,
sense.
They don't have a cognitive understanding that it affects
And there's
them.
nothing they can do about it either way.
You're right. It's a good point because like I'm so immersed in this shit that like every Fed meeting I'm paying attention. I'm listening in my earphones. If I'm at work, like I'm so CNBC's on. But like the fact of the matter is 95% of the population couldn't care less or even knows that there's a Fed decision this week.
Right.
Like
they can't name the Fed. They don't know the Fed's going to change. They don't know what the Fed does.
No.
They just don't.
They think that the Fed is actually a federal government entity when it's not.
Right.
The Federal Reserve's not federal. It's not actually
That's
a federal.
right.
Yeah.
You know.
You can show this here. J.P. Morgan CEO Jamie Dimon says stable coins should work better for international payments. So expanding on last week, talking about J.P. Morgan's shift in a couple weeks ago when we bashed J.P. Morgan. Now they're talking about the stable coins, which is what I think this is really the Clarity Act, the Genius Act, this pro-crypto administration. It's about the stable coins. It's not about Bitcoin. It's not about crypto. And, the crypto altcoin bros can, like, cool their jets because nobody gives a shit about crypto. It's the stable coins that they all care about. It's the stable coins that they're going to be utilizing. It's the stable coins that will eventually be the rails for what they're trying to do for a CBDC, in my opinion. So getting excited for Jamie Dimon being pro stablecoin is just not something that I'm going to sign up for. And even when he talks about, Bitcoin in a better light than he was a couple of years ago, he's still a piece of shit. He's still a pedophile supporter of Jeffrey Epstein and Jeffrey Epstein's money, so I'm going to give the dude no props. All right, on to the next thing here. Samson Mao. Let me stop this video here and go back. Let's listen to Samson Mao speak here, and then we'll talk about it.
There's always concern about Bitcoin, like you mentioned, the quantum concern. Like, what if quantum computing kills Bitcoin? But I posted something on X a few days ago that Bitcoin is not in danger. Bitcoin is the danger, because you shouldn't be worrying about Bitcoin and quantum computing when there are so many other problems that will be caused when quantum computing actually works. But first of all, quantum computing is not a threat so far, and probably won't be for another 5-10 years. Quantum computers can't even factor 21 right now without some heavy customization of the algorithm. But if we did have quantum computers, let's say tomorrow, that would destroy the traditional financial system. All the banking sector would be wiped out. Stocks, trading, everything would be broken. All the encryption used in those systems would be broken first. And it's difficult because those they don't have such a straight upgrade path like with Bitcoin. So for Bitcoin, because it is decentralized and it's software, we know what paths we have to fix the quantum threat, to mitigate the quantum threat. We just have to write the code, and then every node on the network, individuals like myself and others, update our software, and Bitcoin is now quantum resistant.
So I wanted to play this clip from Samson Mao because I see a lot of chatter on social media, X specifically, of the Bitcoin haters, the people that are spreading FUD and misinformation about Bitcoin. And they're always leaning into the quantum thing. It's like, oh, when quantum is catches up, it's just going to destroy Bitcoin. It's going to take out Bitcoin. Bitcoin's not going to survive quantum computing. And it's like, bro, like Bitcoin is a $1.8 trillion asset. You're going to have the power of quantum computing, and you're going to attack a $1.8 trillion asset class when the traditional finance system is hundreds of trillions. I mean, logically, like think about that. You're going to go through the aggravation of trying to go after 1.8 trillion in a small little facet of the financial economy when you can just go after the biggest of the big corporations, BlackRock's balance sheet or JP Morgan Chase, or just the tens of hundreds of trillions of dollars in traditional financial markets. But Bitcoin's what we have to worry about. We have to worry about Bitcoin being attacked. If quantum was available tomorrow, the traditional finance system, the place you got your money, your banks, your 401ks, the equities, the stocks, the New York Stock Exchange, and that would be absolutely ground zero for where quantum would go. And the FUD that people are spreading, like when quantum catches up, Bitcoin's done. It's like, bro, when quantum catches up, they're going right after the traditional system. One of the last things that they'll care about is going after a $1.8 trillion asset class. Now, if quantum comes in 10 years and Bitcoin has shifted to a much bigger piece of the pie, which I believe it will, then we can talk about like maybe, you know, what he was talking about, upgrading nodes, upgrading the software, and that being a concern. But like, still, even if it gets a 10x from here, and we're talking about a $20 trillion asset class, in 10 years, if Bitcoin's 10xing, you don't think that traditional finance markets are also still going to be hundreds and hundreds of trillions? Like, it's just a weak ass argument. And it's disingenuous. It's a straw man argument. And I'm glad that Samson Mao is talking about this and others as well to just put that FUD to rest. Like, it's just absolutely ridiculous. Like, and to read the tweet, which kind of, you know, summarizes what he said, everyone seems to be concerned about the things they don't need to be concerned about. You don't need to worry about quantum computers like killing Bitcoin. Worry about QC cracking your nuclear launch codes. Another good point. Like, can we worry about launch codes being cracked instead of financial markets? Like nukes being let off? That's a concern, right? You don't need to worry about the composition of Tether's reserves. They have an additional $30 billion of group equity outside of full reserves. Worry about your local bank that is definitely fractional and backed by a few rubber bands and chewing gum. You don't need to worry about what price strategy will have to sell Bitcoin. Worry about equities you hold that have cash reserves deteriorating at 10% a year, and worry about what the price they will finally buy Bitcoin at. Thanks for the concern, but we don't need it. Bitcoin is not in danger. Bitcoin is the danger. Such a good point. A major quantum breakthrough would wipe out the entire traditional banking sector first because their encryption is weaker than Bitcoin's and they lack an upgrade path. I tweeted about this a couple of weeks ago. I said, you know, people are worried about quantum computing cracking Bitcoin, yet Home Depot, Target, Holiday Inn, like these places can't keep our financial information safe without quantum computing existing. So imagine when quantum computing does exist and you take your debit card to the store or your credit card to the store. Your shit is already being hacked and your information is already being thrown out into the ethos. Imagine what happens when quantum computing comes along.
When people talk about the, you know, like they're worried about their privacy and all that stuff, I just laugh. You're on some sort of social media on a regular basis. You're buying stuff from online on a regular basis. You use your credit card everywhere you go. Like, but then you're worried about it. Like, well, then don't use that. Like I do all those things. I know that I don't have any privacy when it comes to my stuff. I know that it's just a question of time. Like some point it's going to get hacked. Like, and every once in a while you get that email that your Home Depot card was hacked or whatever that might be. Like it's just what we live in. It's the fact that we live in nowadays. And again, there's really nothing you can do about it. There's really nothing I can do except live off the grid. And it's just impractical. It's just impractical now. Like you have to do these things. So yeah, like but people, I can't believe this. Well, there's things you can do to protect yourself, and there's things so you don't get, and you got to pay attention and those types of things. But yeah, like there's definitely other things I'm worried about than a quantum computer hacking J.P. Morgan, like at some point, or some other big financial institution. I don't know.
They would attack them before they would attack Bitcoin. That's just
that makes sense to
the
me.
Truth.
Yeah.
We got a conference that's going on in the Middle East, and sovereign wealth funds are definitely extremely interested in Bitcoin, and it's my belief, not stating that it's fact. It's my belief that the sovereign wealth funds in the Middle East are waiting to see what happens officially with our Fed and what we do in regards to printing money before they start making these big announcements that they've been stockpiling either the IBIT shares or Bitcoin itself and self-custody. So it's no surprise that United Arab Emirates says Bitcoin is a strategic financial asset and a key pillar in the future of finance. I have a video here. It's about 5 minutes long of Saylor speaking at this conference that's going on in the UAE. So let's listen to Saylor a little under 5 minutes in his own words speaking at this conference.
I don't think so for a couple of reasons. First of all, we have somewhere in the range of 50 million beneficiaries. So if you look at the people that hold our equity and then the institutions that back them, they're like pension funds, insurance companies, nation states, sovereign wealth funds. 15% of all of our securities are held in Charles Schwab retail accounts. So we have a massive distribution of shareholders and beneficiaries, and we have delivered Bitcoin interest to 50 million people, and that will double to 100 million people over the next few years. The second point I make is that 85% of all Bitcoin is held in dark pools, and no one even knows who owns it. So, in essence, since we have joined the network, we've driven the price of Bitcoin up by $1.8 trillion, and that $1.8 trillion has been transferred to 85% of it to people we've never heard of that live in China or Russia or Africa or South America. And so the network is, in essence, decentralizing because lots of money and influence is spreading everywhere else in the world. It's very natural that corporations are going to accumulate Bitcoin on behalf of beneficiaries. Just like BlackRock probably represents, another 50 million investors. Coinbase represents 100 million investors or more. And so the corporations are just on-ramps for families, retailers, and retail institutions to get access. If we are lucky enough, if we ever get to 5% of the network, Bitcoin's going to be at least $1 million a coin. And at that point, something like 18 to 20 trillion dollars of money will be transferred to the 85% that don't hold any of our corporate interest or BlackRock or anybody else. And if we ever get to 7.5% of the network, Bitcoin will be 10 million a coin, and probably 70 to 75% of all the Bitcoin will be held by non-corporate entities, and that means $150 trillion will go to non-corporate holders. We will represent the interest of 250 million investors, and people that you don't know, that you can't trace, will have $150 trillion and they can do whatever they want with it. So I don't think we represent a threat to the network. We really represent a motor, and we're powering the network up. We're driving the price of Bitcoin up from 10,000 to 100,000 to a million to 10 million. And we're doing it by creating common equity that large institutional investors can buy, and then preferred equity and credit instruments. And the equity and the credit instruments we create allow large pools of capital to invest in the crypto economy. And if we didn't exist, none of that money would ever flow into Bitcoin. And then Bitcoin would probably be trading at $10,000 a coin right now. And there would be no corporate influence, and 90% of the Bitcoin would be held by non-corporate holders instead of 85, but the network would be 200 billion, not 2 trillion. And if you want the network to become 20 trillion or 200 trillion, you're going to have to allow corporations, money managers like BlackRock, corporations like ours, and banks like FAB or Emirates Bank or JP Morgan. You have to allow them to enter the network if you want to be 200 trillion. And if you want the network to be 20 billion, then you can dismiss all corporate interest, and then you won't have 20% of the Bitcoin held by corporations, but you will only have 1 penny or 1/10 of a penny instead of $1. And so the trade-off is, do you want the world to benefit, and do you want to get rich, and do you want to let them also get rich? Or do you want to stay poor and keep them from being involved? And that's like mutually assured destruction.
So he makes a couple of interesting points in that speech. A couple that I agree with. A couple that I don't necessarily think are the ethos of Bitcoin, but I would expect somebody like Saylor to think in that way. The first thing is he's completely correct in that without institutions, without the BlackRocks, the MicroStrategies, without the institutions coming in and getting a piece of the network, the price doesn't hit the trillions, doesn't go to eventually 10 trillion, 20 trillion. Like, it's just the inevitability of it. And I know that's a tough pill to swallow for some Bitcoiners. And I represent some of the Bitcoiners that would potentially feel that way. And part of me does, but part of me also understands that this is a necessary evil for the mass adoption that we all seek. You cannot have mass adoption without the institutions. That's the thing that we sometimes struggle with as Bitcoiners, at least the earlier Bitcoiners. The newer ones don't necessarily control or concern themselves with this. This is more of like a pre-2017 Bitcoiner, in my opinion. The ones that came here for the revolution, the anarchists, the cypherpunks, what have you. We wanted to change things, change the money, change the world. We wanted to opt out. We were rebellious towards the system. We believed in Bitcoin because it was a better alternative than the traditional system. And then here we are a couple of years removed from, ETFs, MicroStrategy buying since 2020, owning 3% of the network. And he's talking about potentially owning 5% of the network, potentially owning 7.5% of the network, and then potentially institutions and corporations owning 20% of the network at some point. And I think that's a reality. And that's a reality that Bitcoiners are going to have to make peace with. If you want this thing to explode and go to the numbers that people have thrown out there, and again, I don't want this podcast to be about, throwing out price predictions, $1 million Bitcoin, $100 million Bitcoin, all that. That's not what I'm saying. I'm just saying that if you want these big valuations of Bitcoin to come to fruition, you're going to have to make peace with the fact that JP Morgan, BlackRock, MicroStrategy, and others are going to own large pieces of the network. For reasons that we talked about 15 minutes ago, like an overwhelming majority of the population is financially illiterate, and they don't move until they've seen all the other players move. They don't buy things until it's FOMO time. So we've all had the same opportunity. We've all had the same opportunity to front run the institutions. Some of us did, some of us didn't. Most of us didn't, if we're being fair. Most of the population didn't. And it's all because you didn't do the work. You didn't study. You didn't look into it. You decided that Bitcoin was a scam because somebody on Facebook put up a meme saying it was a scam. You decided that Bitcoin was a Ponzi scheme because some financial guy that you follow, or maybe your financial advisor, told you that it was, and you didn't do the work. You didn't humble yourself. You didn't learn. It's just how things work. And you know, it's a tough pill to swallow for some people, especially early Bitcoiners, and even some of the maybe the newer ones that got in for that reason, to say that, you know, we're an opt-out to the banks, we're an opt-out to the institutions, and then to see MicroStrategy own 5% at some point, or to see BlackRock, the biggest profits that they've made are their Bitcoin ETFs, and to see that and to feel some type of way about that because of how you feel about BlackRock, or to see some piece of shit like JP Morgan and Jamie Dimon, who was such a Bitcoin hater for so long, you know, flip to creating products where he's profiting off of it. This is just the reality. This is the market doing what the market does. This is the free market, free marketing. Like it is what it is. And I understand and can see how people can feel some type of way about it. And in many respects, I feel those same things as well, while also recognizing that it's just a necessary evil. This is what Bitcoin is for everyone and for no one all at the same time, I guess is what you can say. Like Bitcoin was created that the lowest of the low in the totem pole can own it, while the highest of the high can also own it. And while it can be for everybody, unfortunately, it's for everybody, which means that when the institutions come, it's a buying frenzy, and they have more assets and more capital and resources than you do. So the later you come along, the more behind the eight ball you're going to be. And this is Saylor just telling you how it is. And it does add fuel to the haters to say, look, all the, you know, that's being gobbled up by the same people that you were saying that you were fighting against 10 years ago, which is true. I have social media posts in 2015, you know, saying that we were anti-establishment, that we were anti, you know, corporations, and that Bitcoin was going to fight to be an opt-out. And it still is, but it's gone mainstream. And you're fighting against the corporations to get more sats now. And it's just the reality of the situation. It doesn't make Bitcoin bad. It doesn't make it something you shouldn't own. It's a good thing, while also being something that you just have to make peace with at the same time, I guess is what the gist of me going on that little rant there. This next clip that I'm going to play, that I'm going to pause because it's just going to play without me. Sometimes it just does that. This is Paul Atkins, the SEC chair. So this is who took over for Gary Gensler. And he's talking about U.S. markets and how he sees them playing out the next couple of years. So let's get this.
Of using then smart contracts or tokens on chain to be able to, that represent, say, an underlying security. And so then that tokenized security is a security and would be subject to SEC rules by law. But the idea is that if it's on chain, on a blockchain, then there's much more transparency as to where it is. Right now, there's a bit of opacity as to who owns what, and where the company usually doesn't even know where its who its shareholders are, and where the shareholders reside, where the shares reside. So tokenization has the benefit of potentially having, instead of T+1 now, trade date +1 for clearance and settlement, the prospect of maybe T0. Now, depending on the instrument, and we have to think about netting and all sorts of other things with respect to some instruments. But in principle, the idea of on-chain delivery versus payment and receipt versus payment, DVP, RVP on-chain, is a prospect of de-risking the markets, making them much more transparent and then sure as far as clearance and settlement, because it's always that the gap between clearance and settlement and then delivery and payment is the real introduces risk into the system.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in the, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront. As far as cryptocurrencies and whatnot, there were really only 2 countries in the world here in the last few years that were working to make cryptocurrencies illegal, and that was Communist China and the U.S. through the SEC. So that's changed. It's a new day now, and so we want to embrace this new technology.
It's fascinating, that last point that he made, because it's very true. That there were only 2 countries in the world that were trying hard to ban crypto, and it was Communist China, who we're always saying is such a bad place to be, and it was us. We were doing exactly what China was doing, trying to ban crypto. I mean, it made me think of something too that I wanted to say really quick. This podcast is filmed in New York State. We're live here in Niagara Falls, New York State. I didn't realize, because I don't really look into these crypto exchanges much, because most of just about every single set I have is off self-custody. But I had somebody send me a screenshot that, I recently orange pilled, got him into buying crypto, and he's buying on Coinbase, and he's located in Florida. He's not in New York State. And in his screenshot, it said, lend against your Bitcoin on Coinbase. And I have Coinbase, and I'm like, that's weird. Like, I don't have that on my app when I look at it. So I went online and I looked, and Coinbase offers lending against your Bitcoin in 49 states, except the state of New York. So while the U.S. and the greater scope of our country is getting more crypto friendly and going against the archaic old SEC and being anti-crypto, we in New York State are still under the BIT license, and things have not really changed with this administration for us here in New York State. We still don't have access to Binance.us. We still don't have access to a plethora of other different kinds of exchanges. And we still don't have access to any of the things that Gemini or Coinbase are doing in the 49 other states here in New York. So while the rest of the country is getting more friendly in this ecosystem, New York State remains Gestapo-like. And it's just crazy that I heard him speaking like that. And things are changing, and the financial capital of the world being in New York is still very, very archaic in how we're doing things. And no surprise that we've just elected a communist to run the city of New York. Side note on that. Last thing we got here, a little bit of relevance to end out the podcast. 77% chance of Supreme Court ruling against President Trump's tariffs per traders on Kalshi. The betting markets are very, very accurate, and the betting markets have the Supreme Court ruling against President Trump and his tariffs, which would not be good for the $2,000 tariff checks that we're never going to get anyways. Yeah, I
I was
know.
gonna do something.
Yeah,
important
the
with it.
dose checks too.
Yeah.
Like,
Yeah,
I'm
well,
waiting for that
yeah,
one.
that $7,000.
Waiting
was
for
gonna
that
come in
dose check
handy.
that's coming in. The 5K dose checks and the 2K Trump stimulus. It's just more nonsense. Relax. They're going to start printing. Assets are going to go back up. Your Bitcoin's gonna start mooning again. Before we end the podcast, because I always forget, I'm a terrible self promoter. Please like the video. Please share if you are watching and you're not a subscriber to the podcast on YouTube. Defion Labs Productions on YouTube. Please go there. Give us a subscription. Share this out. Comment if you liked something, if you didn't like something, if you agree, you disagree. All that stuff. Help us, find that algorithm marker. Get us out. And as always, we always end the podcast the very same way, with the ethos of Bitcoin that translates into all aspects of life. Don't trust, verify. Thanks for watching. We'll be back next week. See you next week, guys. Peace.